Yeah, Kelly, thanks. Yeah, at least the data is showing the ADP employment report, along with high-frequency jobs data, all suggesting the Delta outbreak is sapping some of the strength out of the labor market and raising downside risk for the Friday jobs report. ADP coming in at a disappointing 374,000 for the private sector. That compares to an expectation of 600,000 and a forecast for both the private sector and the government of a robust 720,000 coming this Friday. Job gains we're seeing in most sectors, just not enough to meet expectations for another strong report. ADP said its data showed Delta has made a dent in job growth, and other data backs up this Delta connection. HR software company UKG finding hours worked falling 2.4% nationally through mid-August. Growth declined in all regions, but you can see there it fell hardest in the Southeast. That's where the Delta variant has been the most widespread. Data from HR software company Homebase, another high-frequency data we follow, shows declines in leisure and entertainment, another potential sign of the Delta variant at work. Spencer Hill, senior economist at Goldman Sachs, tells me we've learned that the Delta variant is exerting a larger drag on consumer confidence, services consumption, and the labor market than we initially expected. Goldman looking for below consensus 600,000 jobs this Friday. It may be the Fed wants more confidence that it's seen the worst of the economic effects of the virus, Kelly, before announcing that taper.
Well, speaking of the taper, so we have Goldman taking down its estimate now for Friday's payroll number. We have other traders saying that this, if it's a disappointment, could easily push the Fed to delay the taper. You have to wonder, Steve, if markets are sort of saying, well, they're sort of loving it either way. Either we're strong enough to warrant a taper, or we're weak enough that they're going to push it off, and we're kind of back in that risk-on environment.
I think that's called the heads I win, tails you lose, flip of the coin. Kelly, I think that's right. And I think, by the way, if the Fed tapered, it wouldn't be the end of the world for the stock market or earnings growth or GDP either. So I think that there's actually a third way the market can win here. I think it's maybe a little more concerned about the taper and or even rate hikes than it should be, because you would think in a normal environment the Federal Reserve would not have to be buying $120 billion of assets every month or keep interest rates at zero.
Right. Steve, we appreciate it. Thank you very much, Steve Leisman, with a recap there. Let's turn to Christina Partsinevelos with the latest CFO Council survey results that suggest the C-suite's attitudes are changing. Optimism's pretty good, I think, Christina. What's the latest?
I think, right? So employers right now, we know, are bowing down to workers in the hottest job market in decades. Pay hikes, free iPhones, hybrid work schedules, college tuition, anything to get workers on their payroll. But our latest CFO survey shows businesses are still struggling to find those workers. When we conducted this survey back in Q1, 19% of CFOs said it was harder to fill open positions. Now, 69% of those surveyed fall into that category, which is why many of them are coughing up the dough. A majority say that their company is experiencing rising wages, including nearly 90% of U.S. CFOs surveyed. So we know there's a resurgence in infections driven by the Delta variant of the coronavirus, but that could discourage some unemployed people from returning to the labor force. And even though a majority of CFOs say they've reinstated or extended mask mandates in physical office locations, including here at CNBC, especially in the United States, but the situation right now is the post-Labor Day weekend return to the office appears to be falling apart. Some like Google, Ford, Lyft have all pushed back the return to office start date to 2022. And nearly half of all CFOs in our survey also say they've delayed the return to office plans, and 1/4 say they've mandated all employees be vaccinated in order to return to the office. The resurgence of COVID-19 cases is casting uncertainty on future plans yet again, and it's making it harder and harder for employers to find workers. And that means the road ahead is going to be a little bit longer and bumpier than originally hoped.
I guess the sort of glass half full way to look at this, Christina, is at least they're still trying to hire, right? The sort of big, scary concern out there would be that suddenly the demand side of the economy slows. And if they're frustrated trying to find workers, at least it suggests their business is still going strong and they're at least looking to add that head count.
Which is an interesting point, given so many people, there aren't enough workers. So it shows that a lot of people may be retiring or still opting to not return back, even without the benefits given from the government. The Wall Street Journal wrote a report on that just today, speaking on those states that remove the benefits. in July have not seen additional job growth despite taking them back. So that's an interesting factor to consider as well. Like you mentioned, though, many are hiring. It's still uncertain, though. How do we move forward? Force the vaccines? Do we have to force booster shots? Many people don't know what the right move is, and that's why we're left with this uncertainty.
Yeah, and how it'll all feed into the number we get Friday morning. Christina, thanks very much. Christina.